Today, Bitcoin climbs to kick off the week after hitting a new all-time high above $125,000. Galaxy Digital unveils a Robinhood-like trading platform. And eToro's global market analyst Lale Akoner weighs in on what's behind Bitcoin's jump to a new record. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Major cryptocurrencies in the green to kick off the week, with Bitcoin trading close to its new all-time high. As of noon Eastern, Bitcoin traded at $125,000 after reaching a new record around $125,700 just this afternoon. The cryptocurrency's previous record was at the $124,000 level, reached in August of this year thanks to friendlier crypto regulations and increased demand from institutional investors. Ether climbed around 3% as of midday, and Solana rose nearly 2.5% to nearly $236. Major cryptocurrencies have been on the rise since Friday, supported by recent gains in U.S. stocks and inflows in Bitcoin ETFs. We'll have more on catalysts for Bitcoin's price in just a bit. Let's take a look at today's top stories. Shares of Galaxy Digital jumped after the company announced the launch of its new trading platform called Galaxy One. The platform will compete against those like Robinhood by giving investors access to traditional stocks and ETFs on top of digital asset offerings. The company's CEO, Mike Novogratz, joined CNBC's Squawk Box this morning and explained why he believes new platforms like this will disrupt banking in the future.
Right now, you've got a bank account and you got to shift that money somewhere else to buy stocks. You got a brokerage account, you're going to buy crypto, you got to go somewhere else. And so we think all of that's going to aggregate in one place.
As of midday, shares of Galaxy jumped about 7.5%. And sticking with product launches, today Grayscale announced the crypto asset manager will introduce staking to its Ether and Solana investment products. This update applies to the Grayscale Ethereum Trust ETF, Ethereum Mini Trust ETF, and the Grayscale Solana Trust, which were already available to investors. And it makes Grayscale the first to offer staking through US-listed spot crypto ETPs. In a news release, Grayscale said this is one of the only ways to access SOL staking through a traditional brokerage account. Grayscale said that it plans to extend staking to additional products as the digital asset ecosystem evolves. All right, back to the markets for our main story. Crypto World's Jordan Smith spoke with Lale Akoner, eToro's global market analyst, about the catalyst that helped drive Bitcoin to a new record and whether we can expect even more highs for the cryptocurrency before the end of the year.
Let's start with Bitcoin because we've got a new record high today. The cryptocurrency crossed above the $125,000 level for the first time ever. And I guess my very first question to you is why? Because, I mean, traditional assets are known to shrug off things like this government shutdown that we're seeing in the US right now. But what's got Bitcoin moving higher and notching this new all-time high?
Sure. Look, first of all, I would say that we think that it's a broad-based rally rather than a speculative spike. The macro backdrop is quite positive. Obviously, yields are falling, liquidity has improved, volatility is low. We are seeing broader risk assets rallying on the Fed's easing cycle, and obviously some structural supply side positive tailwinds as well, and obviously increased corporate adoption as well. So overall, I would say that the drivers behind the rally seems like a positive backdrop coming from the macro side.
One thing we talk about often with crypto markets is this correlation to tech stocks. And obviously, AI has been a huge driver for gains when it comes to the tech sector and in many cases, the traditional markets overall. How much is the AI trade spilling over into the Bitcoin trade when you're talking about these things that are moving the crypto market?
I think in the short term, they are correlated, and that's true for both on the upside, but on the downside as well, that actually during some market stress period, crypto has traded in sync with a lot of the tech stocks. However, I think for now, what we're seeing again is quite a broad-based rally in risk assets in general. The market is really hopeful about the Fed cutting rates by 5 times by the end of 2026, and structural issues such as tightening supply in Bitcoin and corporate adoption. A lot of corporates are putting Bitcoin in their treasuries. In fact, I think over 60 firms are now expanding. They're now holding Bitcoin in their treasuries. So I think it's decoupling a little bit from the usual tech correlation because of these factors.
Yeah, I want to talk about the digital asset treasuries that are popping up and what they mean for the market in just a moment. But to sort of set the scene a little bit, October and really Q4 are historically strong times of the year for Bitcoin. I think Uptober is the phrase we see a lot. I'm curious if you expect the quarter ahead to be as strong as it has been historically, given all of the things that you're talking about in these drivers. And is that trend of a strong Q4 the thing to watch?
Yes, it's actually the best 3-month performance window, just judging from the historical performance, the track record for Bitcoin. In fact, median returns of about 50% for the fourth quarter is what we saw for Bitcoin in the past 10 years. And I would say that the macro backdrop is going to support that. As I said, the liquidity in the market is quite easy. Obviously, we have the monetary policy easing, but also the fiscal policy quite easy as well. So it does tell us that actually, Bitcoin could rally further. I would say a clean breakout about 127K would actually trigger a momentum toward 125 to 132 to 135, just judging from the fact that it could trigger a short covering as well.
Continuing on this thought of Bitcoin and its historical trends, we're now about 3 years from Bitcoin's previous low after the FTX crash in 2022. And it's been about a year and a half since the last halving. This all makes me think about the 4-year cycle. Is that cycle still a thing as Bitcoin becomes more mainstream and follows these other trends? And if it is still a thing, where are we in the cycle?
Look, we are still saying that from a 6 months performance perspective, there's still upside. Again, judging from the fact that the macro backdrop is quite positive. However, I would say that increasingly there are some signs of late cycle maturation. Obviously, each additional leg increases the risk of exhaustion as well. If you see things like altcoins outperforming Bitcoin, meme coins enter the ETF space, or when infrastructure stories dominate the headlines, it's often a symptom of maturity rather than the start of a new phase. However, as I said, the macro backdrop, the liquidity-driven rally is keeping us quite optimistic about the next leg.
Let's go back to those digital asset treasuries that we were talking about earlier and to altcoins, as you mentioned. I mean, these treasuries are getting a lot of attention as more of them come online. It seems like there's a new one every week, and they're buying up billions of dollars in cryptocurrencies. Is this a stabilizing force for the crypto market? And I guess looking ahead, if there is a slowdown in the hype around these companies or consolidation, is that a risk to the crypto market?
I think it's, again, a major difference in this part of the rally is institutional participation and the fact that, again, as I said, over 60 corporations right now hold Bitcoin in their treasuries. I think it just legitimizes the asset class in general, decreases the volatility of the asset class, and therefore opens up more opportunities for institutional investing as well. It's sort of like a loop of increased participation from institutions, decreased volatility, and therefore increase in that diversification role of Bitcoin, which helps everyone. It helps the portfolios of institutions, but also retailers as well.
I have one last question in regards to allocation size, because it's been steadily increasing in people's portfolios. What is the proper allocation size when it comes to crypto? There's been conversations around 5 to 10%. We've had some people on this show say as high as 40%. I mean, what are you seeing in the market in terms of where this is going for allocation?
I think it depends on the use, or it depends on the person as well. Like we say that it should be in an amount that prevents any single asset from derailing one's long-term goals, right? And at the same time, that allows that person to gain from a meaningful participation in the upside scenarios as well. So I'm not going to give a percentage because it depends on the person, but it should be in a way that volatility should not derail your long-term plans for whatever you are investing it for.
Okay, that's all for Crypto World today. We're back again tomorrow, and we'll see you then.